And if you've invested in Bitcoin, well, yesterday was probably not the day for you. The value of Bitcoin plummeted. At one point, it was selling for under $61,000, and that's now half of its all-time high of more than $126,000, which was reached back in October of last year. Now, this drop comes as tech shares also fell in recent days. Let's bring in CBS News business contributor Javier David. Javier, thank you so much for your time today. Okay, so the crypto market experienced one of its biggest downturns in recent months. Just how significant is that, and why is it happening?
Yeah, look, the Bitcoin and the crypto story overall is just very complicated. It's really not just one thing happening. It's the narrative is really multifaceted. Part of the story is this AI inspired risk aversion that we're seeing all over that's dominating markets. Another is the Fed chair nominee, and people are wondering if he's going to be hawkish or dovish on inflation. Another influence is the liquidation of a lot of leveraged positions and just plain old profit taking that, after a stellar rally above 100,000 in Bitcoin. But all of that being said, there are a few things that are abundantly clear. Bitcoin's still having a really hard time convincing a broad swath of the investing public that can be trusted either as a safe haven, an inflation hedge, or an alternative to paper money, which has a lot of problems of its own. So, as you said, it's an asset that's fallen about 50% from its record high. It lost 20% this week at the lows. So, it's a high risk, high reward asset. It's made a lot of people rich. I mean, can't knock the hustle or whatever Jay-Z said that one time. But the reality of it is you have to stomach a lot of stomach churning volatility and some pretty steep losses whenever crypto shakes out. And these drawdowns happen a lot. They are significant, and they're just not for the faint of heart.
If you've been following this type of thing, if you're into cryptocurrency, crypto definitely hit a dip, a major dip really, because this thing was, it was trading very, very high like several months ago, and it went down around like 60K. Um, and as I just looked at it, it's back up to 70K. So a lot of volatility in crypto, and if Bitcoin dips, then of course other cryptocurrencies are going to dip because Bitcoin is technically king of all cryptocurrencies. But as he was saying, if you have assets or your money, your resources involved in cryptocurrency, involved in Bitcoin, then you have to have the stomach for the dips when they happen. And some people are going to see it as a buy opportunity as well. But if you're the type of person who, gets nervous when you start losing, um, it just may not be the asset that you really want to invest in. By now, kind of, they may have thought that Bitcoin would kind of be widely adapted and, be accepted everywhere, but we have yet to see that happen. And I'm not sure if that'll ever happen or how long that it would take for that to happen, because there's like a set amount of Bitcoin that can be mined, and even though that is the case, doesn't mean that the Bitcoins, can't continue to float around and, be transacted. But, you know, this is just really one of those things I've come to accept and learn that it's going to happen with Bitcoin. Not only Bitcoin, it happens with stocks, and it happens with real estate. It happens with a number of assets who, have a predetermined value that can go up and down. So it's um it's just really one of those things, honestly. And like I said, if you don't have the stomach for it, you may not want to, invest your money into it, and you may want to, try to find something else to really put your money into to invest in. But as it does dip, of course, it's going to definitely raise up again. It's going to increase again. But when that'll happen, who knows? I mean, it's back up from when this report was done. It's already back up to like 70K. So it's going to go up and down like a roller coaster, that's for sure. But most people who have the resources and are steadfast in their investing and stuff like that, they know once you see a dip, that's like a major buy opportunity to get into a position and see if you can ride the wave.
And so based on that, if you've invested in Bitcoin, should you be concerned about this, or is this one of those things where you just wait it out and see what happens?
You have to wait it out and you see what happens. If you're already invested, it's sort of in for a penny, in for a pound. So after all this time, it's been embraced by a lot of institutions and small investors. So it's not easy to just get out of it right away. But it's a very volatile thing, and it really undermines the attractiveness as an asset or an alternative to fiat money, or even something you want in your portfolio mix. Do you buy this dip and risk kind of trying to catch a falling knife? That's very much the open question right now.
Yeah. Okay, so Javier, big tech companies, they lost more than $1 trillion in market value just this past week. And this looks like investor anxiety. What is causing that anxiety?
Yeah, it's being they're calling it the SaaS apocalypse, the services software as a service apocalypse. And what you're seeing is a market that's really struggling to wrap its head around the existential disruption of the AI that AI represents. Who's going to get impacted? How much all of this is going to cost, and whether it's going to even pay off in the long run. So investors are in this mode where they're shooting first, they're asking questions later. Anthropic is an AI startup. They're pretty prominent in the AI space. They kind of lit the fuse this week because they released this new tool that upends traditional legal software. And it just spooked everyone. And one Twitter AI user I saw today joked that AI is going after the accountants, and he's not wrong. Software stocks in general are all tumbling because markets suddenly realize that AI can just cannibalize a lot of the functions that comprise the foundation of these companies, names like
Yikes.
Salesforce, ServiceNow, Intuit, LegalZoom. The smarter and more effective this technology gets, the bigger the challenge it is for a number of the established services that until now have been kind of seen as relatively future proof. And this is kind of an extinction level event for them. And given all the money that's spent on AI, they could be right.
Yeah. Yeah. AI is not only scary just for people who, work those type of jobs, but also these companies who have software as a service, and a lot of this stuff can get done really quickly with, just a couple questions into AI, and it can do what a lot of people have been paying, like Salesforce, and a lot of these other companies, millions of dollars to come in and set them up, as their software, and provide them with some type of platform to where their employees are able to do their job, and AI will be able to just come in and be able to get these people up and going, and it may save them a few dollars, at this current moment. So a lot of these companies are going to have to figure out how they're going to be able to work with AI, and how they're going to be able to, you know, be flexible and adapt to AI, because, AI is here and it's only going to get more and more advanced as time progresses.
And Javier, I want to ask this because there's people who are just selling right now. Where are they putting their money? What's happening?
Well, usually, I mean, the joke is it's going under the mattresses. Everyone moves to cash. They don't
Mm.
know where to go, where to spend, what's trustworthy. There's an impulse, obviously, in times of extreme volatility to move to cash. It feels safer than stocks. It's certainly more liquid, but there are risks to doing it that way because you can miss out when the market rebounds. You never know, as today's movement shows, when the market is kind of oversold, people start coming in and buying, and then all of a sudden, you're off to the races again, and then you may have missed out on something that you otherwise would have still been invested in. So everyone tends to go to cash, but that's not necessarily the most advisable strategy.
And I assume the idea when it comes to investing is that you're always investing for the long term. So even if something happens, that shouldn't chase you away or scare you off, right?
Yeah, absolutely. I mean, AI, and I mean not AI, but crypto, I think convinced a lot of people that they had to turn into sort of day traders, and they're constantly watching the markets, and you have to trade and sort of get ahead of every move, and that's not a good idea because you do sacrifice kind of the long-term vision, and it makes you very jumpy and very reactive, and that's not a good place to be when you're invested for the long term. You always have to see the bigger picture. You can't sort of react to every negative headline and every move down.
Man, this is a pretty good clip, man. Pretty good information in here. And, as he was basically saying, man, if you're investing for the long term, and, trying to, you have to just ride the roller coaster. Um, you can't turn into a day trader and just try to predict every, dip and raise, and, it's just not the thing to do. Because of course, when things rebound, you want to have your position already so that you can benefit from the rebound. It can definitely be scary once you start seeing yourself lose, a couple thousand, a couple dollars, a couple million, depending on your investment level. But you got to understand that everything rebounds. If you look at any type of candlestick, charts or any type of graphs that show like investing, then you do know that it's a roller coaster and nothing's ever just steadily climbing and never taking a dip. Even if they have a long period of climbs, it's going to eventually take a dip somewhere. So you just gotta ride that roller coaster and always think of your long term plays and your long term goals, and just make sure that you're dollar cost average and not really putting more into the market than what you can afford to put into the market, because you have to understand there's going to be volatility in the market. So the market sometimes going to be steady, sometimes it's going to increase, but it's also going to decrease sometimes as well. But yeah, I'm going to go ahead and wrap this one up. If you like my content, make sure that you like, comment, and subscribe to my channel. This is Justin Paul. Peace.